Warren Buffett's golden rules for building wealth that you need to follow. Did you know that Warren Buffett, one of the richest and most successful investors in the world, turned a modest $10,000 investment into more than $100 billion? His financial wisdom has been a guiding light for millions, and he's often referred to as the Oracle of Omaha for good reason. But here's the catch. Despite all his success, Buffett's golden rules for building wealth are surprisingly simple, yet they require immense discipline and patience. Today, we're diving into Warren Buffett's golden rules, rules that if followed, could transform your financial future in ways you never imagined. Whether you're just starting your journey to financial independence or looking for ways to level up your wealth, these principles are essential. Let's unlock the secrets to success as taught by the master himself. Rule No. 1. Never lose money. Rule No. 2. Never forget Rule No. 1. Buffett's first and most famous rule is a powerful and simple one. Never lose money. Now, let's be real. This sounds almost too obvious, doesn't it? But here's the thing. Warren Buffett isn't just talking about avoiding catastrophic losses. He's talking about the compounding effect of wealth over time, and how even small losses can derail your financial progress. The risk of losing money is often more impactful than the potential gains, especially in the world of investing. Think about it, losing 50% of your money means you need a 100% gain just to break even. So, how do you follow this rule? Be smart about where you place your money. Invest in businesses or assets that you understand, that are stable, and that offer a margin of safety. This doesn't mean playing it overly safe, but it does mean understanding the risks and making calculated, informed decisions. Invest in what you know. Buffett often stresses the importance of investing in businesses or industries that you genuinely understand. It's one of his cardinal rules. It's so tempting to jump on the latest trend or invest in something that everyone is talking about. But it's a dangerous game, especially when you don't know the underlying dynamics of the investment. Imagine trying to build a house with no experience in construction. You'd probably end up with a very shaky structure, right? The same goes for investing. Buffett made his fortune by investing in businesses that he was familiar with, like insurance, banking, and consumer goods. He famously avoided investing in tech companies for many years because, simply put, he didn't understand the industry. Be fearful when others are greedy and greedy when others are fearful. This quote from Buffett is legendary. It's all about the concept of contrarian investing. The stock market can be incredibly volatile, with wild swings in investor sentiment. When everyone is flocking to a stock because it's the hot thing, that's often when the prices are inflated and risks are high. On the flip side, when everyone is panicking and selling off their stocks, that's when there could be valuable opportunities lurking. Stocks or assets may be trading far below their true value. Buffett has capitalized on these moments throughout his career, buying stocks when everyone else was fearful. The trick, however, is remaining calm and having the patience to weather the storm. Invest for the long term. Warren Buffett is a patient investor, often holding on to his investments for years, sometimes decades. One of the key principles he follows is investing for the long term. In fact, he once famously said, "Our favorite holding period is forever." This isn't just some slogan. It's a fundamental approach to building wealth. The beauty of long-term investing is that you allow the power of compounding to work for you. Short-term fluctuations or market downturns might make you feel the pressure to sell, but long-term investing allows you to ride out those waves and take advantage of market recoveries. The key is choosing businesses that are solid, with strong fundamentals and a competitive edge that will sustain them through economic cycles. It's not about catching the next big thing. It's about being patient and waiting for your investments to grow. Avoid debt like the plague. Buffett has been vocal about his disdain for unnecessary debt. His philosophy is simple: don't borrow to invest and avoid taking on too much debt, especially consumer debt. Debt can quickly become a ball and chain, weighing you down and limiting your financial flexibility. Think about it. Every time you take on debt, you're committing future income to pay off the interest and principal. This restricts your ability to reinvest or capitalize on new opportunities. So how do you avoid debt? Live below your means, save a portion of your income, and only borrow when absolutely necessary, ideally for productive investments, like a home or a business venture that generate income or build equity. For Buffett, staying debt-free is a way to maintain financial freedom, and that's a powerful tool in wealth building. The importance of a strong team. Warren Buffett is known for surrounding himself with a team of incredibly talented individuals, particularly his longtime business partner, Charlie Munger. Buffett often stresses the value of working with great people, whether it's employees, business partners, or advisors. The right team can help you make smarter decisions, avoid costly mistakes, and spot opportunities that might have gone unnoticed. A strong team doesn't just increase your chances of success, it amplifies your results. So whether you're building a business or investing in the stock market, don't underestimate the power of a good team. You want people around you who challenge you, bring fresh ideas, and help you see things from different perspectives. Trust in those who bring value to the table, and invest in relationships that can push you forward. After all, no one succeeds alone. Focus on quality, not quantity. Buffett isn't a fan of chasing every opportunity that comes his way. Instead, he's focused on investing in high-quality businesses that have strong fundamentals, good management, and a durable competitive advantage. While it may seem tempting to diversify across hundreds of different assets or businesses, Buffett believes it's better to concentrate on a few well-chosen investments that you truly believe in. This quality over quantity approach has been a cornerstone of his success. The goal isn't to be everywhere and do everything. It's to invest in the best opportunities that have a high probability of long-term success. By focusing on fewer, higher-quality investments, you're able to devote more time and attention to each one, maximizing your chances for growth. Know when to sell. Knowing when to sell an investment is just as important as knowing when to buy. Warren Buffett often holds onto his investments for the long term, but there are times when selling is necessary. He advises that you sell an investment when the underlying business begins to change for the worse, whether that's a shift in management, a decline in industry trends, or when a company no longer aligns with your original investment thesis. Buffett says that you should always be willing to hold onto a great business for life. But if the investment no longer holds the same value or promise, it's time to reevaluate. This isn't about being emotional, it's about being strategic and making sure your portfolio stays healthy. Pay attention to valuation. Warren Buffett is known for his emphasis on buying undervalued companies. In simple terms, he wants to purchase stocks or businesses when they're selling for less than they're worth. This concept of value investing is at the core of Buffett's strategy. It's not enough to just buy a company because it seems like a good idea. You have to be mindful of its price and potential return on investment. If a stock is trading for a price that's higher than its true value, you could be setting yourself up for a loss. The key here is patience, waiting for the right opportunity when the price is right. It's about being disciplined and not overpaying, no matter how enticing an investment might seem. Keep learning and stay curious. Warren Buffett once said, "The more you learn, the more you earn." And it's so true. Buffett spends hours reading every day, books, financial reports, and anything that can expand his knowledge. In fact, he attributes much of his success to his insatiable curiosity and constant learning. Whether it's about new industries, new technologies, or new investment strategies, staying educated is crucial. The more you know, the better equipped you are to make sound financial decisions. So don't rest on your laurels. Always keep learning, stay curious, and continue to build on your knowledge base. This lifelong commitment to growth and education is what sets Buffett apart from the crowd. So guys, let me know your thoughts in the comments section below. For more interesting content, give this video a thumbs up, and don't forget to subscribe to the channel for more awesome content. Have a nice day, and I will see you in the next video.